Hello, folks. Dan Bird here on Wednesday, doing a midweek update on the stock market. I had a few people that asked me if I would do this, and probably makes sense. Very bloody day today, all week. For those that have been watching this channel and getting my newsletter, if you exited the market as I suggested back in July, and I had been saying for a while, in end of June, beginning of July, that beware of the July high. So typically, whenever the market makes a high in July, this usually happens every year. So this is not anything new, or doesn't mean that the whole market's going to crash. Could keep going down, but it may not crash. But the July high usually means that's the high for the next couple of months until October. October is when the bottoms usually get put in. 7 of the last 14 bear markets have ended in October. And last year, I did a whole session on 2023 versus 2024. It's working out pretty much as I thought it was going to. We'll look at that in a second. But for those that did get out, congratulations. I'm sure you're sitting there very happy now. As I am, I'm in cash and just have to watch the market go down. I don't have to really worry about much. But the next thing is when should we get back in? That's the big question. A lot of people think that when it has a bounce, that's it, that the downtrend is over. But as I've said before, it's not. It will bounce. There'll be a relief rally. I actually thought it would be more than what we've had so far. And then it will go even lower than it did before. So let's take a look. Hate to put it that way, but that's how markets work. All right, so this is my website for anyone that's interested. Just go to breakpointtrading.net. The newsletter is right here. And if you want to check to see what earnings are coming up, you can do that right here. And if you want to look at our current secular bull market that started back in 2009, officially 2013, we hit the top of this channel. This has been here for quite a while. We hit the top of this channel, and now we are getting rejected, coming back down. So I'll show you where I think we're going to probably head to as a result. Okay, so let's first take a look. By the way, IBD changed their outlook on Monday. Last week, they went to market in correction, but they were saying cut exposure to 20 to 40%. Now it's 0 to 20%. So essentially, don't be in the market. That's what they're saying. So let's look at the S&P right here on this chart and make this a little bit bigger. And I'll also turn on my new little app. So I put this on here, the head and shoulders pattern, a few weeks ago, maybe a week and a half, 2 weeks maybe, before it even got up into this right shoulder. And I said that this could be a head and shoulders pattern, and if it is, then the target for it will be the distance from the head to the neckline. The neckline is this dashed line right across here, right there. So the same distance will be the target. So that put the target right here. On Monday, we blew through that. Tuesday, we came back up, but there was a lot of selling at the end. And today, we basically tried to rally, actually. Went back up into this right shoulder, and this is the next potential head and shoulders. And this is why I thought it would actually rally a little bit more than what it has. It went right to the 50% Fibonacci level and basically got rejected right there. You can see that the target for this head and shoulders was the 61.8 Fibonacci level. Some people ask me, where do I set my top and bottom for the Fibonacci? So most charting programs will allow you to do this. I do 0 at the top and 100 at the bottom. You can flip it around, do it the other way. It doesn't really matter. But what I like to do is to find a significant bottom and a significant top. And that's where I put the start and the end. So in this case, it's right down here. basically 49.50 roughly, 49.61. And the top was up here when we hit the top, the high. And what you can see is the target for the head and shoulders was essentially right at the 61.8% Fibonacci level. Funny how those things work. And the reason they work, just like technical analysis in general, is because everyone else is looking at it. So they're all seeing the head and shoulders. They're all seeing the Fibonacci level. We blew right through. I'm sure they're now saying, oh, maybe there's another head and shoulders, which there could be. And if that does execute, it actually technically kind of did on Monday, but it didn't stay there, because here's the the neckline is right across this dashed blue line right there, which also is the 61.8% Fibonacci level. Also happens to be the highs that we hit back here, came down and then finally blew through it. Well, it didn't blow through it, but we went through it. So that turned that resistance into support. But this is not only the neckline, so you can see the shoulder over here, and now we have a shoulder over here. It's not only a neckline, but it's also a significant support level. It's also a Fibonacci level. There's all kinds of reasons why this particular one is really important. And what this means is that the next distance is from this head to this now neckline. So this is the first head and shoulder neckline. This is the second neckline right here. The distance, the equal distance would be right down here at about 40, almost to the 2021 all-time high. I think we probably are going to come down to the support level right here, which is where the Fibonacci started. It's a little below the 200-day moving average, and it's right around the 5,000 area. So that's where I think we're headed. I think we're headed to 5,000. I would not be looking to buy right now. One of the things that I usually like to look at is on the MACD up here, the zero line. You can see zero right there. Just follow that across. I'm starting to actually put that in my charts now. But you can see we went below zero right there. So that defines a downtrend. We have not gone back above it. Went below zero back here. So the downtrend started right in this area. Actually started a little earlier than that. But right there was confirmed. And we didn't go back above it until here, which is actually when the market started to move back up again. So I would not be looking to get back in or buy until this starts to move back up. It gets close to zero, and probably we're going to go to 5,000. So we'll see what happens. I still think we will end the year higher, by the way. So let's take a look at what happened today. Here is a 5-minute chart. So, and this includes the volume as well. So this is for 18 days. So it's basically, here's this week right there. And then we go back to last week and the week before, etc. So this is where the high was. This is July 15th and 16th, right back here. This is where I was saying beware the July high. I think we probably are at the July high. So the market will likely go down until October. Not straight down, but we'll go down, we'll come back up, keep going down, we'll come back up like we did today. We'll keep going down, we'll make a lower low, lower highs and lower lows. There's a low, there's a lower high, lower low, lower high, lower low, lower high, lower low, etc. So we'll probably make another lower low down below 51.25 and probably head it to 5,000. And then we'll have to see what happens from there. But we could also get a relief rally, which will be a significant rally. And a lot of people will think that that's it. That's the end, but it won't be. We'll continue down until October, I think. So keep your powder dry. You can play the short side if you know how to do that. I'll show you a way to do that. On my website, under the charts page, At the bottom left of this are some ETFs. So you can short by buying an ETF. You don't have to know how to short things. You can just buy the ETF. So for the Qs, I put the long and the short one side by side, so you can see how symmetrical they are. So the short one is at the top. QID, that's 2 times the Q. So if the Q goes down 5%, this will go up 10%. You just buy it just like a stock. There's the ticker symbol, QID. So here's the low for that. Here's the high for the NASDAQ. Right there at around, this is a daily chart. So just before the 15th, that was the high. As this went down, and for those that follow my trend models, which I'll show you in a minute, the 5-day crossing the 21-day is usually where the trend changes. So you can see the downtrend started there, which means the uptrend started here. So you could have got in on the green arrow and you would still be in if you did that. So that's a way that you can play the market as it's going down. You can be making money as it's going down. Now, remember I said that the market is going to get a relief rally. And when that happens, this is going to go up. The NASDAQ will go up, and it may be an explosive move up. And the QID will have an explosive move down. So if the NASDAQ goes up 5%, then the QID goes down 10%. It goes down twice as much also. So that's something you have to be careful of. So I'm not so sure it's the best time to get into that. What I would do is wait for that rally in the market. And the way it looked today, we may not get that anytime soon, frankly. But this is the way that you can play the downside. So this is the SPY. So that's the S&P, the Dow down here. This is the IWM, which is the Russell 2000. You can see TWM is the short side. So it's done really well as everything is rolled over. It also has the semiconductors are in here. So semiconductors have been really taking it on the chin, and you could have played the short side using that one. Also have the VIX. So the VIX is really, really difficult. I don't recommend people trying to do this. The reason is because it moves so fast. So this is the short VIX, which means the VIX went up. You can see how far it went up, but it doesn't stay up there for very long, and it will go down just as rapidly. But you have to be very, very nimble. I don't recommend you trying to do the VIX. Gold also. So gold is just sort of chopping around, going a little bit sideways. Silver is in here. You can play silver the same way. This is oil. So if you think oil is going to spike right here, this is the long oil right here. Oil's been heading down until today, but you could play the short oil as well. So as oil started to roll over, you could play the SCO, get 2 times the move of oil, and then Bitcoin. So you can do Bitcoin the same way. So this is long Bitcoin right here. Bitcoin has been rolling over. We can actually look at Bitcoin on the main page. The home page, anyone that's interested, Bitcoin is right here. And there you can see the chart for Bitcoin. It's been heading down for quite a while. I said a while ago that Bitcoin is in a downtrend. You can see the downtrend line that I drew a while back. Came up and hit that and then got rejected. Going back down, the support line is right here, 52.5. Bitcoin right now is at 55. Probably is going to go to 52.5. And then we'll see if that becomes support or if it keeps heading lower. I don't know what it's going to do. All right, let's take a look at the trend models. So these trend models are something that's been pretty interesting. I just added something new to this today. I'll show it to you on the Magnificent Seven. I haven't quite finished everything yet, but one of the things I wanted to see is when I see something change, like Meta today kind of bucked the trend of the whole market. Meta actually had a short-term uptrend today. And anytime anything changes this week, I highlight it in yellow, so it becomes very easy to pick those out. And I recommend just looking at this at the end of the day after the close to see what's moving and what's not, and decide what you want to do with it. So if we look at the chart for Meta, and you'll see the pink arrow right here, because the 5-day just moved above the 21-day. To get a blue arrow, that blue line, the 21, will need to move above that red line, the 50. But that got an up arrow today. Now it ended at the low of its, near the low of the day. So I don't know if that's going to hold, but at least it got an up arrow. So this is the daily chart where you can see those moves. But if you wanted to look at it a little closer, I put in the zoom in and zoom out. So the zoom out is a long-term 2-year chart, weekly chart, moves slower. This one here is a much closer looking chart. So if we want to look at Meta and zoom in on it, we can see right here. And now I'm actually putting in the recommended trend change. And that happens actually before the arrows, before it changes on the trend model. So you can actually get a jump. So you can see right here, the up arrow actually happened yesterday, even though the pink up arrow happened today. So see the pink happen right there, but this one happened over here. And basically the methodology that I use is if it's in an uptrend, these bars typically are green or blue, and the moving average is far away from the next one below it. But when it starts moving towards the moving average and then it gets a red bar, that is potentially an early entry. And all of these, you know, you can see the MACD is heading down too. So that gives you another confirmation. So it's just a way to get in a little bit earlier. So this one over here, the uptrend was triggered there, but then it went back down and went back up. So these really, I would just ignore these because the MACD line is still below zero. You can see I've put in the pink zero line now. The MACD line didn't go above zero until right here. So when that happens, when it's in a downtrend, it's below zero, I ignore all this choppiness right through here. However, you could have still got in right here on this green arrow. And then it took off right here. Or you could have waited and got in on that green arrow when this went above zero. Either way. Just a way to, you know, move a little bit quicker. Now, for those that are long-term investors, if you wanted to play Meta on the long side and you didn't want to really have to look at it, this is a 2-year chart, a weekly chart. And I kind of did the same thing in this case. And this really shows you what these indicators do. So right here, remember, this is 2 years. Right here, the MACD went above the zero line. So that ended the downtrend. Confirmation that the downtrend is ending. I don't have any price in here. I just have the moving averages. So, because that's all I want to see. I just want to see when the trend is changing. So that one went above zero. So that would have been right here. This one down here, this is a longer term MACD. That crossed over right there. So I actually put the arrows in. That happened right there. And the ADX line, this is the momentum indicator, cross, you can see the green crossing the red happened right there, which happened to be right where the moving averages crossed. And that was the time to get in. You could have got in on one of these if you wanted to. But this one for sure is the confirmation to get in right there. That would have been March of 2023, and you would still be in. So you'd still be in Meta, and you can see Meta has not gone below the zero line up here. And none of these other ones have triggered yet. When they do, I'll put an arrow in. So this is just a way to play these on the longer term. You can see right here, Tesla got one above the zero line there. MACD one above right there. ADX line crossed right there, but we had no cross of the moving averages. And it is below the 200-day moving average right here. So even though we got all these early signals, we don't have confirmation because they didn't cross like they do here. When they cross, by the way, they'll turn green if it's bullish, and they'll turn red if it's bearish. See, I'll see the red through here and see the green through here. So there's just something that I added to the trend models for those that are following this. There's trend models for the indexes. I put those in for the indexes too. You can see right here, Bitcoin actually got a down arrow today. So if we look at the short term, even though we got a down arrow today, actually, let me go back and do the one in the middle. So here's the daily chart, and there's the down arrow. This is the medium term down arrow that we got today. But if you look at the shorter one, the zoomed in one, you actually would have been out way back here. So, and if we look at the zoomed out one for Bitcoin, the weekly, the 2-year weekly, you could still be in it. So they got 2 early signals right here. The lines crossed right here, so that's the confirmation to get in. And the ADX really didn't cross until way back here. It's just an additional confirmation. But right here, you could have got in again March of 23, and you would still be in Bitcoin. So that's the way to use the trend models for those that are interested in doing that. By the way, I will be doing. I had a couple of people every month. I do a Zoom call with members, and I record it. So here's all the recordings throughout here. I haven't done August yet, but I had a couple of people say, can we do one this week? Because the market is so volatile. And while I'd love to do it, I've got things I have to do this weekend, so I can't do one this week. But I will be doing one the following week. So the Saturday after this Saturday, which is the Saturday is the 10th, so the 17th. 17th, I will do a Zoom call, and it's open. I'll answer people's questions. I'll go through a lot of the new things that I've added to the site. I'll talk about the trend models again. So that's an opportunity for people just to learn. Sometimes they go for quite a while, actually. One other thing that's interesting is this right here. This is, let's see if I can zoom this in. I keep track of all the sectors, industries over here on the left, sectors, industry groups, intermarket relationships, commodities, metals, and currencies. And I track it day over day and week over week, which is what this one down here is. So the orange is the short-term trend, gray is the medium-term trend, and yellow is the long-term trend. And then I put it all together, just get an overall picture. This is the lowest that it ever has been. This is just unbelievable. I mean, it started to go down way back here. So it gave some early signs, leveled off right through this period, but then started down again right here. You can see the long term doesn't move very quickly. It takes a long time for the 50-day to cross the 200-day, but it is trending lower. But look at the orange one, which is the short-term trend, and look at the medium term. So that's the one that comes in next. So, and you can see right here on this image here, this kind of tracks it day over day and week over week. So if it's lower day over day and lower week over week, it gets a red. If one of those is different, so lower week over week, but higher day over day, it gets a yellow. And if it's higher day over day and week over week, it gets a green. So you can kind of see just by the colors how the market has been trending. Kind of mirrors this chart over here. So this is not good. It's the lowest I've ever seen it. So I think the market still has a lot more to go on the downside. It will probably continue to sell off. So I wouldn't be getting back in anytime soon. For those that have thought about it, I think we still have some more downside to go. Let's see what else. I think that's about it for today. Oh, we can look at the individual stocks too. We'll look at the trend model for the Magnificent Seven. We'll look at each one of them. So let's look at Google. This is the daily chart. Google looks terrible. Got a little bit of a bounce today. There's Amazon. They missed their earnings. So not good for Amazon. There's Apple. Apple's kind of hanging in there. Got a bounce today. There's Meta. Meta's been the best one, actually. Here's Microsoft, also not doing well. Nvidia ended at the low of the day today. So Nvidia, as SMCI, had a terrible earnings last night. It's actually in here, and I'm going to show you that chart too. But after the after the close, SMCI had earnings, and they announced a 10-for-1 stock split. I don't know when that's going to split, but they announced that. As soon as they announced the stock split, the stock went up 100 points after hours last night. And today, let me look at it over here. Down 125 points from the open today. So up 100 points after the close, down 125 after the open. That's a 225-point move. I feel really sorry for people that were getting in after the close last night, thinking that it was taking off when they saw it up 100 points, because they lost $225, 225 points today. Anyway, Nvidia and most of the semiconductors are following along. Tesla also down, it's red. Netflix had a little bit of a bounce, ended at its lows. AMD has not done well for quite a while, so AMD is down. There's SMCI. So SMCI had, somebody else pointed this out to me, but had a sloppy head and shoulders over here. There's a left shoulder, there's a head, there's a right shoulder. The neckline is right across here. And the target for this was 500 right here. So I was talking to somebody on in another chat room about this last night before they had reported. And I said, you know, the head and shoulders, the target is 500. So if they miss or don't have bad guidance, then I think they're going to hit the target of 500. And he said, well, if you put the neckline way down here, which you could, then the target's 300. So somewhere down here, 325, 350. So it could easily get there if the rest of the market continues to roll over, which I think it's going to. I think we're going to have a rough time. Again, not straight down. We're going to have bounces, but that doesn't mean it's time to get in unless you're very nimble. You get in and out very quickly. So there's SMCI, Oracle continuing to go lower. It's about to give a short term, so it'll get a blue arrow tomorrow, right there. And Palantir actually had earnings, and they actually did well with earnings. They sold off significantly way down here. Then they had great earnings, so they rallied. Today they actually ended lower than they closed yesterday. So they're giving back most of the gains that they had yesterday. We'll see if that will hang in there. They actually had really good earnings. So that might actually just move sideways from here. We'll see. But that's what most of those look like. If I go back to Nvidia again and look at it from some different views. I'm out of Nvidia too, by the way, for those that are interested. Here's the candle. You can see a big solid red candle. Ended at the low of the day. Yesterday's candle was indecision, spinning top. It means it as much to the upside as there was to the downside, and it ended right in the middle. Today was confirmation that the spinning top was really sellers taking over, and it ended at the low of the day, which means the only reason it stopped going down is because the market closed. So Nvidia may continue to go lower. 95, I've said in the past, was, you know, where support was down here. If it blows through that, the next support may be here at the 200-day moving average, which is around 80, a little above 80. So that's very possible. If we look back 2 years, this is a daily chart, 2 years. You can see the damage, the technical damage that it's done This is the 95 level right here where these highs are. And then the 80 level is down here at the 200-day moving average. So if it gets down there, it's going to be right here at this low. That's the support line. If it doesn't hold there, and they've got earnings coming up on the 28th, so that's about 3 weeks out. They normally run up into earnings, but the way the market has been acting, I'm not sure that's going to happen this time. So have to be careful. There's a 10-minute chart. Here's the short-term one that I showed before. So this is the one where you actually could get in a little bit earlier or get out a little bit earlier. Probably would have been out right here on that one before the pink arrow. Actually, that is where I got out of Nvidia. And then the long-term 2-year chart, you can see back here is, as a long-term holder, you could have got in back here way back in February of 03 for $21. So if you had been following this, I didn't have this system, but I have it on there now. If you've been following the system back here and got into Nvidia, $21, you're fine. You don't have to worry about anything. You know, this could roll over, and it take a while for this to give another down signal because these have to cross. So this won't turn red until this one crosses this one. So this one crosses this one. So that's quite a ways out. And it's still above the 0 line up here. So I think Nvidia in the long term will be fine. I think there's going to be some pain in the short term, however. So that's what it looks like. Be careful, everyone. Hope everyone has a good week. We'll hopefully talk with Zuber on Sunday. And if anybody has any questions, or you can put it in the chat of this video and I'll try to answer them as best I can, or send me an email. You can go to my website, breakpointtrading.net. My email address is breakpointtrading@gmail.com. I enjoy replying to questions, so if you have anything, just shoot me an email. Or if you want to participate a week from Saturday in the Zoom call, it's usually very educational and lots of great questions from subscribers. But you can just subscribe to the website. You could even do it. This will give you a notice that the newsletter is ready. There's no credit card or anything required for that. Monthly subscription is $15 a month, but there's a 7-day free trial. So if you want to just join, if you want to join the Zoom call, you could sign up for the free trial about, a couple of days ahead of time. And then you can join the call. And if you like what you see, you can stick with it, or you can upgrade and get everything over here for $99 for a year. So hope to see you there if you're interested. So have a great week and stay safe. I would not entertain buying anything new. Wait for the market to start to turn up and get some of those up signals. Don't catch a falling knife. Thanks, everyone. I'll talk to you soon. Take care.